We'll go through over 18 bullish Tesla stock charts and graphs that James just posted, who is Elon's favorite retail Tesla stock analyst. So let's dive in. James is projecting record quarterly deliveries and earnings for 2023. Keep in mind that every single chart that I will show you today also includes projections, so just keep that in mind. But we do have a lot of data from the past as well. As you can see, these are Tesla quarterly deliveries by model and site also. For example, this right here is a Fremont-made Model 3, which is made in California, and you can see how it basically reached its peak capacity and is not really growing, but that's when other models and other places, for example, this one is Shanghai made Model 3. They kick in here. While Tesla did miss Q3 and Q4 deliveries, James is saying that's because of winding down the wave. He is expecting new record highs. And also, interestingly, if you look back just a few years ago, if you are a newer Tesla stock investor, the growth was not always just smooth. Look right here, 2018, grow, and then boom, there's a fall here, then some growth, then a fall, and then growth again. So this recent fall, that's just how things usually work out anyway. Now, I would expect a few dips somewhere along the way, just like sort of what we had before, but it is difficult to put that in a model. Tesla makes the two best-selling luxury vehicles in the world, the Model 3 and the Model Y. Model 3 sales are still growing, but not by as much as Model Y, which is ramping up production past 3,000 vehicles per week at both of Tesla's newest factories. So just look right here. The white color is the Model 3, and the Model Y started right here. As you can see, it started growing. This is the Model Y. And now the Model Y is selling a lot more units than the Model 3, and it is expected that the Model Y will sell a lot more than the Model 3, and probably the Model Y eventually, at least for 1 year, will be the world's best-selling vehicle. And then let's see what happens with the compact. Well, of course, that would be also the world's best-selling vehicle, but it would have to take that crown away from the Model Y, right? James is pointing to the ending of this delivery pattern where we deliver everything or a lot of the vehicles at the end of a quarter, trying to increase the delivery numbers just for that single quarter. The red line shows the production and the dotted line shows the deliveries. And so sort of for the first time, clearly production is exceeding deliveries. And well, that certainly helps. And this is how historically Tesla delivered vehicles. And we should aim for this red line instead of this blue line, which is what usually actually happens. Earnings projections from James. We will have some bumps somewhere along the way. I wouldn't expect it to be so smooth, but again, when you're projecting, it's hard to know exactly when you will have that bump. So that's why projections always look like that. But yeah, it's looking good. Here is an updated chart showing where Tesla's average dollar of revenue comes from. As we can see, we are not making much money from regulatory credits at all, and it is mostly from automotive sales. Then we did have some revenue from energy, but not that much. But that is about to change. And this chart shows how Tesla spends its average dollar of revenue. As you can see in light blue right here, this is research and development, and Tesla is not spending much on research and development, and yet it is leading. And here are Tesla's earnings per delivery, which are world class for any automaker, let alone an EV maker. James is taking price cuts into consideration as well, but he says Tesla's strategic price reductions will throw the brakes on earnings per delivery growth in 2023, but earnings dollars will rise because deliveries will rise. And here's the same chart excluding regulatory credits. As you can see, James is quite bullish. The more vehicles you produce per week, the harder it gets to deliver all of them by the end of each quarter. And so James is expecting that the inventory is going to grow. Tesla's automotive gross margin, excluding regulatory credits, improved throughout 2021 and 2022, even as revenue per vehicle decreased. That's hard to do. So this right here, I believe, is the average revenue per delivery, and these green columns are gross margins. So you can see the gross margins are growing, while the revenue per delivery declines. I mean, it's easier to make a higher margin on a Model S than it is to make a high margin on a Model 3. Tesla average revenue and cost of sales per cash delivery. Pause if you like to take a look longer. Personally, this is one of my favorite ones. Here's how Tesla's revenue has grown over time. Mind you, Q4 for 2022 is not here yet, so that's going to look really impressive once we add that. But already, check this out. Like this whole year, James is expecting that Q4 will be bigger than all of 2019 put together. He said that right here, so that's quite bullish when you look at that trend. So this explains why James is expecting so much revenue per delivery, or profits per delivery. He says, my forecast for future years' earnings growth is largely driven by more buyers opting to pay for FSD at higher prices as its features improve. I could be wrong about that. So James assumes that FSD would be basically solved by then, and that FSD would be purchased by pretty much everyone by then. This is another one of my favorite charts. Shows global Tesla deliveries. As you can see, we do have some bumps along the way. That's inevitable and that is expected, but the clear trend is up. And here's how Tesla's price to earnings ratio has changed over time. I find this interesting to look at. Some Tesla bears believe that Tesla's operating expense numbers must be fraudulent because they aren't increasing by enough. That's mostly due to CEO stock compensation. Q4 2021 in particular had a one-time $340 million payroll tax for Elon's 2012 stock compensation exercise. So as you can see, recently Tesla operating expenses have been coming down actually. And here are some of the estimates for Q4 from James. If you like to pause and take a look for a little bit longer, you may do that right now. So this was fun to look at. Big shout out to James for putting all of this together. And these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video.